We're talking all things gold, markets, and how the elections are affecting the precious metals with Kai Hoffman, CEO of SOAR Financial. Kai, welcome to the show. It's a pleasure speaking with you today. You're speaking with us from the German Gold Show. First time launching it. You're the founder. Exciting. Tell us about the show.
Super excited. Actually, slightly nervous because we're hosting our show tomorrow, Thursday and Friday. It's the first time we're hosting it online. We were supposed to do it physically in Frankfurt in May, but due to well-known reasons, we had to postpone to November. And eventually, we took the leap of faith and went online. Not voluntarily, like we're not too keen on competing with all the other conferences out there. There's great conferences, but we found a niche for ourselves, and it's called the German Gold Show. It's a Deutsche Goldmesse, and we're focusing the German retail market. That's our target audience. No other conference is really targeting that, and we got a great lineup of speakers set up or lined up for the next couple of days, and I'm extremely excited to talk about.
Tell us about the speakers and some of the key presentation points.
Yeah, we got 10 keynote speakers, 29 companies presenting as well. So there's a great ratio of information to value. And keynote speakers include, for example, Professor Dr. Thorsten Polleit. He's the chief economist of Degussa Goldhandel, the largest bullion dealer in Europe. We got Rod McHugh, Rick Rule, Michael Mross, a bit of a Euro critic. But it's really interesting to get all facets of the spectrum covered. And we can track like gold trends, what's happening now after the U.S. election, what can we expect in terms of gold supply, and other dynamics that are developing right now. So I think it's a really timely event as well. And our speakers also, like Markus Bussler, he's a journalist for the Aktionär covering one of the mining stocks themselves, will give you a good perspective on how to position yourself as well.
Okay. All right, let's talk about the election because it's timely. It looks like we're going to get a divided government and possibly even a contested election if Trump loses. The odds are in Trump. The odds right now, as we speak, are in Biden's favor, and some analysts I've spoken to said that it's possible that Trump would contest the election results, and that could add more uncertainty to the markets. What would happen to gold?
Good question. Like in 2016, we've seen a sell-off when Trump won. Actually, right now we're seeing a lot of volatility. As soon as the bookmakers are changing their odds, we see sell-offs in gold, or actually price spikes in gold as well. So I think if Trump wins, we might see a small sell-off again, just because risk off, and we see more certainty or more security in the space, and the U.S. dollar might actually strengthen. If Biden really prevails and pulls through, then we'll probably see a bit of a run in gold, in my opinion, and see a bit of a increase in gold purchases as well, just as safe haven investments, because nobody knows what Biden is going to do in terms of corporate taxes and other measures there as well.
What did uncertainty push up gold prices? Why are we seeing so much volatility in gold?
That's a good question, because everybody expects Trump to increase the stimulus less than perhaps Biden will do. Opportunities of further lockdowns, economic risk is higher with Biden than with Trump. So gold is a safe haven investment. You were not going to put your money in real estate REITs or commercial real estate right now. You'd rather put that in a safe haven investment, and gold is that safe haven for now. Bitcoin to a degree as well, but I'm no expert on Bitcoin.
Yeah, exactly. Well, you brought up a good point about gold being a safe haven. We've seen some interesting dynamics with gold prices recently as gold traded in tandem with equities. So a couple sessions earlier this week as well as last week, they traded in the same direction. When equities sold off last week, gold went down. When equities climbed this week, gold went up. Why do you think that? Do you think gold is not being treated as a safe haven right now as we speak?
I had a good conversation with somebody else the other day, and it seems like gold is more of a realistic mirror of the market itself. While the S&P 500, the Dow Jones, keeps running up because the market is flooded with money, it seems like gold, silver is more of a real reflection of what's going on in the market. That's why there is so much volatility, and we keep bouncing between 1860 and 1910 to a degree, so $50. But percentage-wise, it always makes a difference, and that's what we're seeing right now. It's more of a reflection of what's going on in the market, and more of a reflection of reality.
All right. What about supply and demand fundamentals? Does that have any impact at all on gold prices, or is this being treated entirely as a currency or as a monetary instrument?
I think right now it's more monetary instruments. I think we haven't seen too many supply disruptions, even due to COVID. I think we're fine in that regard. Gold is sourced from all over the world. That is fine, and it seems like there's a lot of strong demand despite less jewelry sales. There's a lot of interest in bullion. Actually, the Germans are buying gold like crazy. We're the biggest buyer of bullion in the world right now. I don't have the exact number in front of me, but it was just published this week. We're way ahead of also the Swiss, and North America is not even mentioned in it. So there's a lot of interest for bullion and demand. As Germans, we've had the scare, the hyperinflation in 1923. So of course, gold and owning safe haven investments is sort of embedded in our DNA, and that's why gold is always has that special value for us as well.
Is Europe a significant portion of gold demand?
Yes, like from the retail perspective, gold demand on the bullion side, especially. Right. Industry uses, of course, it's more Asia because gold is in cell phones and other applications. But bullion wise, Germany is by far one of the largest markets, and German retail is holding a lot of bullion in its own vaults at home.
Okay, well, tell us about the lockdowns we're seeing, right? Germany, France, London. Is that going to cause supply disruptions, logistical disruptions?
Not. We'll have to see how it affects actually supply chain, getting it from the bullion dealer to the to the buyer in the end. We've seen a couple of disruptions earlier in March, April, when there was just no deliveries possible, and actually the supply was or bullion was sold out to a degree because there was a big run on gold. We've seen that, and bullion dealers had a hard time delivering actually smaller quantities. So investors only had an opportunity to buy bigger amounts of gold to actually take delivery.
Tell us about your sentiment regarding the European economy now, Kai. I know you have roots in Germany, and this country is being locked down again. A lot of analysts did not anticipate another round of lockdown. A lot of people didn't think it was possible.
Exactly, and I didn't expect it either. Maybe it works probably better in Europe than it does in North America. And North America is a very service-based economy, so seeing a second lockdown in the US or in Canada is more unlikely. Europe is more manufacturing-based, so you can more seclude. You have more bubbles. There's less interaction, perhaps, than in North America. So economy, like we're doing okay, but it's more the tail end, the rat tail, so to speak. It's less car manufacturing, or not even less car manufacturing, but less demand for cars. People are not going anywhere. They don't need the cars. They don't put as many kilometers on it, for example. So there's a whole rat tail, like the butterfly effect, right? You flap one wing and it has massive implications on other things as well. Airbus or Boeing are producing airplanes for just on hold right now. They're producing airplanes. They're just sitting there. So we'll see how that goes. And we should be fine, or not as damaged like as the US would be or the Canada from a second lockdown perspective, but it's not great. And people are losing their jobs. So, and Germany, like since we're a social, not socialist, it's a social market economy. We try to provide enough capital or cash to people at home that have to stay at home to sort of balance that. We'll see how that goes.
Well, one thing that's interesting that came out of this pandemic is that the ECB is contemplating issuing digital euros. Actually, on the ECB website, it says that one of the reasons they're issuing a digital euro is that the digital currency is supposed to provide relief during disasters such as a pandemic. So, what are your thoughts on this? Do you like this idea? Do you think it's going to be a threat to gold? What do you think?
I'm a bit of a hypocrite because I use my credit card for everything. It doesn't matter if I buy gum for $2 and tap my credit card, right? But cash has value. You can't replace cash, and you'll have a lot of opposition towards digital currency, and saying that it's easier to distribute cash in times of pandemic. That's baloney, in my opinion, and pardon my French there, right? But you can easily transfer money into people's bank accounts, not like the tax authorities have access to those bank accounts anyway. So it's well, it makes sense in the times we're in Bitcoin, and it's sort of the competition there, and governments are losing control. And I'm not a conspiracy theorist, but I'm sure that's part of the equation, or part of the thinking or thought process of sort of installing a digital currency, the loss of control. But it'll take a while till we see that implemented.
Yeah, they're not the only banks doing this. The Chinese central bank is also doing this. Do you think there's a practical purpose for doing this? I mean, you mentioned controlling the flow of digital currency, but I'm just talking about the practical use. Like you said, people use their credit cards, even their phones to pay for stuff anymore. Everything's already digital, even though it's based on cash. It's still digital. So why do we still need a digital euro or a digital yuan?
That's a very good question. I wish I had an answer for that. And as I said, I'm a hypocrite. I love cash, but then again, I pay everything digitally. So I don't think there's it might make online trading easier, but also tracking is a lot easier. It's like I'm looking at both sides of the camp. I see both arguments, but cash, whatever you have in your pocket, you can go out and buy something immediately instead of having to tap something. Just assume a power outage. What happens then, right? So in that case.
Okay. Yeah, let's go back to gold now. Do you have a forecast for us? Something you have in mind?
Not really. I'm not a big macro guy, to be honest. Like, I love gold where we're at right now, and I don't understand why the stocks are selling off today. So, I'm super happy with $1,900 gold. Like, if we go over 2,000, I'll be ecstatic. But we got to be a bit realistic. If Biden wins, gold might actually go higher. If Trump wins, we'll probably stay around the same level. We'll test some technical levels. 1860s one that needs to hold. If that breaks down to the downside, we probably see we will see lower levels, but I'm also fine with it. Companies are printing cash right now. The producers are putting out fantastic cash flow statements. They're producing cash. They're sitting on cash, and I'm just hoping. And since I'm a little more focused on the junior miners, I'll hope to produce a lot more M&A activity in the space and just a lot more interest in general.
Yeah, $1,900 gold is pretty good for miners, right? They don't really need anything much higher to sustain good free cash flow right now.
No, margins are incredible because the costs haven't crept up yet. We haven't seen the big cost increases yet. That usually happens when gold increases costs, or gold price increases, the margins increase, and costs usually creep up as well. But for now, we've been seeing that the costs are fairly steady. They're not creeping up as well. And a lot of companies have done a great job reducing the debt on their balance sheets. So that's not an issue anymore for many. And that makes a big difference. And I can't wait to see some more of the Q3 numbers coming out any day now.
Okay, let's talk about mining finance now, because I know that's your bread and butter. You and I have talked about this a couple months ago. You have brought up this interesting stat, and I think in the month of May alone, it was we had more inflow into the capital inflow into the juniors than all of last year combined. Now, has that tapered off a little bit?
It has. As we've come closer and closer to the U.S. election, lots more uncertainty entered the space. Our numbers have shrunk, unfortunately, and we're only tracking junior mining investments, 1.5 billion market cap, $100 million financings, but that has tapered off a bit. So right now, actually, I'm being bombarded with private placement offerings right now. So I'm assuming post-election, we'll see more activity again when we know where things are headed. But for now, it's slowed down. The numbers have dropped off. We're not as in a hype mode anymore as we were before. A lot of financings are also coming free trading right around this time. So the market has to absorb a lot of paper right now, and investors have to buy more on the market. So that's also tapering some of the interest in private placements.
What's causing this taper? Is it just prices for gold?
No, well, we're still at $1,900 gold, right?
Right,
So like, I'm not counting that as a valid argument, to be honest. It's really more just uncertainty. Like, we don't know. Like, the U.S. election has been used as the main reason for uncertainty, as I said, but also other reasons, like a lot of paper coming free trading in the junior mining space. We're still not seeing as many generalist investors in this space. So I'm hoping personally that the Q3 and Q4 numbers of the bigger producers will attract more generalist investors to the space that will bring bigger checks or bigger dollars as well.
Well, even if they do attract capital back into the space, what's stopping investors from just going to the ETFs instead of the individual companies?
Nothing, unfortunately, and that's the problem. The generalist investor, it's too easy to invest in an ETF. But in general, if you're somewhat educated, and you don't have to do much, but if you just read up a little bit, you can actually pick out some of the companies in those ETFs and probably perform better than the ETFs themselves. ETFs are the lazy way of investing into the gold space. Unfortunately, it's not really helping the companies, and I've gave a number of presentations on that, because ETFs don't participate in private placements. Yes, they help increase the share price. Yes, they increase volume in the stock, but they don't put money directly into the company that would help actually generate shareholder value or undermine the share price appreciation. And that's the reason of concern. That's why I'd rather see investors educate themselves a little bit. Don't have to do much, but invest into a couple of those companies directly and help them succeed, actually.
Well, a lot of people don't know how to pick stocks. They don't even know where to start, actually. So do you have any tips for them?
Start with the producers. It's easy. Go the easy route. Look at the mid-tier producers, and I think there's still a lot of value to be had. I'm not a big fan of the barracks or so, just because it's out of my wheelhouse. It's too big. I'm the last one to figure out when something is happening. But with the mid-tier producers, you can be fairly close. They're still participating in the conferences, like at Deutsche Goldmesse, for example. Like, we have Endeavor Mining presenting tomorrow as well, or Thursday, November 5th. Right, that's a 1 million ounce producer. They still grant you access. You don't have to be a super accredited investor to join certain conference calls. So that's where I would start.
Okay, so how can investors take part in your show now, finally?
Yeah, they can register for free at Deutsche Goldmesse. I hope you can see it behind us, deutschegoldmesse.online, which shows the .online because it's an online event. German Gold Show translated. It's free to register. We'll make sure that there are lots of replays, or all the replays are available. And as I said, we've got fantastic keynote speakers that are going to give you an idea of what's happening in this space.
Kitco is going to be speaking to some of these keynote speakers over the next couple of days, so stay tuned to that. Kai, thank you so much for speaking with me today. I appreciate it.
David, thanks for your time. It's awesome.
Good luck with your show. I look forward to it.
Thanks.
Thank you for watching Kitco News. We'll have more coverage for you for the German Gold Show. Stay tuned.